right, so we're going deep on mortgages in Kenya today.
Really diving deep.
Yeah, using the Central Bank of Kenya's annual bank supervision report for 2023.
Is it interesting?
Yeah. And, a lot of people have questions about what's really holding back the mortgage market there.
Yeah.
And this report's got some clues.
Yeah, it does. It really offers like a fascinating look into what's going on.
Yeah, so let's sort of, play detective here.
Okay.
And start with just the basics. Like, what's the overall health of the mortgage market in Kenya?
Okay.
Is it booming? Is it struggling? Or somewhere in between?
Well, the report shows that the total value of outstanding mortgages actually increased to 281.5 billion Kenyan shillings in 2023.
Okay.
That's a 7.5% increase from the year before.
Okay. 7.5% growth isn't bad.
No?
It sounds like things are at least moving in the right direction.
Yeah, growth is definitely there, but it's not the whole picture.
Okay.
Here's where it gets a little interesting.
Yeah.
A tiny group of just 9 institutions hold almost 90% of the whole market.
Whoa, 90%. That's a huge chunk controlled by just a handful of players.
Right.
What does that kind of concentration mean for someone who's actually trying to get a mortgage?
Well, it's not great for competition.
Okay.
Less competition often means fewer choices.
Right.
And less pressure to offer like attractive rates or innovative products.
And it's kind of like if there's only 2 grocery stores in town.
Exactly.
You just kind of have to take what they're giving you.
Right. You're stuck.
Yeah, even if it's not a good deal.
Exactly.
Okay, so that market concentration, that's one major factor that could be holding things back.
Absolutely.
Okay, now let's talk about interest rates.
Okay.
What's the report saying about those?
The news isn't great on that front.
Okay.
The average interest rate on mortgages climbed to 14.3% in 2023.
Wow.
Which is up from 12.3% the year before.
Ouch. Yeah, that's a noticeable difference.
It is.
What's driving those rates up?
A couple things.
Okay.
The Central Bank of Kenya has been raising its benchmark rate to try and control inflation. And globally, interest rates are also rising. So
Right.
all of that affects what you see on your mortgage.
Yeah. And then to add even more uncertainty,
Yeah.
the report points out that most mortgages in Kenya have variable interest rates.
Yeah.
That's got to be a little stressful, right?
Absolutely.
When you're trying to get a mortgage.
88.4% of mortgages have variable rates.
Wow.
So that means your interest rate can change throughout the life of your loan.
Oh, man.
Imagine trying to budget when you don't know what your interest rate will be next year.
Talk about a financial roller coaster.
Right.
So we've got market concentration and these rising interest rates.
Yeah.
2 pretty big hurdles for people who want to buy a house.
Absolutely.
But the report mentions some other unexpected obstacles too, right?
It does. This is where the detective work gets really interesting.
Okay.
One of the biggest surprises for me was the difficulty with property registration and getting clear title on land.
You mean just proving that you actually own the property?
Exactly.
You would think that would be pretty straightforward by now.
You'd hope so, but
Yeah.
inefficient land administration systems are creating major delays and headaches for borrowers.
Yeah.
So imagine you finally find your dream home,
Yeah.
you secure a mortgage, and then you hit a wall because of property title issues. How frustrating would that be?
I can only imagine. Yeah, just piles of paperwork
Right.
and bureaucratic nightmares.
Exactly.
Okay, and what's another unexpected obstacle?
This one was also a surprise.
Okay.
Lengthy charge process timelines at the banks themselves.
Charge process timelines.
Yeah.
What does that even mean?
It's the time it takes for a bank to officially register its security interest in the property
Okay.
once you've gotten a mortgage approved.
So even after you've jumped through all the hoops to get approved for the loan,
Right.
there's even more waiting involved.
Unfortunately, yes.
Ugh.
These bureaucratic delays add weeks or even months to the process.
So it makes the whole thing more expensive.
Yeah.
It's complex.
Yeah.
Okay, so we've got market concentration.
Right.
We've got rising interest rates.
Yep.
We've got these unexpected obstacles with property registration and bank processes. It's starting to sound like a pretty uphill battle.
It can be.
For anyone who's looking to buy a home in Kenya,
Yeah.
is there any good news in this report?
There are a few glimmers of hope.
Okay.
For example, the report shows that the average mortgage loan maturity is extending.
Okay.
In 2023, it reached 11.7 years,
Okay.
which is up from 10.9 the year before.
So you get a little bit more time to repay the loan now.
Exactly.
Yeah.
That can make a big difference when you consider those high interest rates.
Right.
And there's another development that could lead to more affordable mortgage options in the future.
I'm listening.
The Kenya Mortgage Refinance Company, or KMRC for short.
Okay.
It's starting to play a bigger role in the market.
Okay.
They're providing cheaper long-term finance to lenders, which could eventually translate into better rates for borrowers.
So it sounds like KMRC is kind of stepping in
Yeah.
to try and help make things a little easier for everyone.
Right. They're trying to make it easier to get access to those funds.
Okay. So is that having a real impact yet?
It's still relatively early, but it's a positive sign.
Okay.
The growth KMRC suggests that the government is serious about tackling some of the challenges
Right.
in the mortgage market.
Okay. But beyond those positive developments, the report also highlights some risk factors that banks are laser focused on when they're evaluating mortgage applications.
Absolutely.
So what kind of risks are they worried about?
Well, of course, the usual things, like someone's income and credit history.
Right.
But the report also mentions a couple of other factors that might surprise you.
Okay. I'm intrigued.
One that stood out to me was the bank's assessment of the applicant's industry.
Really?
It seems like banks are considering the overall health and stability of the industry you work in.
When they decide whether or not to give you a mortgage.
That's really interesting. But if you're in an industry that's struggling, your chances of getting a mortgage might be lower.
It seems that way.
Wow.
It makes sense, though.
Yeah.
If your industry is facing challenges, your job security could be at risk, which would impact your ability to repay the loan.
So it's not even just looking at you as a borrower.
Right.
They're looking at your whole industry.
Exactly.
Okay. Are there any other risk factors that they're looking at?
Yes. The report also mentions the importance of strong management.
Okay.
Within the borrower's company.
Interesting.
It's not just about your income.
Right.
It's also about the stability and competence of the leadership where you work.
So even if you have a great income, a great credit history, if your company is not well managed, that could be a red flag.
It could.
Wow, that's a much more holistic view of risk.
Yeah, they're really looking at the big picture than I would have expected.
Definitely.
So what have we learned so far in this deep dive?
Well, it seems like the Kenyan mortgage market is this complex ecosystem.
Okay.
Where a lot of different factors are interacting. We've got these macroeconomic trends like market concentration and rising interest rates.
Right.
Then we have those kind of unexpected obstacles like property registration and bank processes.
Right.
And now we see that banks themselves are being more cautious, looking closely at borrowers, industries, and the companies they work for.
Wow. It's a lot to take in.
It is.
But we've only scratched the surface of this report.
I know, right?
There's a whole section on technology and regulation.
Oh, yeah.
That could give us even more insights.
Absolutely.
Into what's going on in the mortgage market in Kenya.
Can't wait.
So let's take a closer look at those areas when we come back.
Okay. So welcome back to our deep dive into Kenya's mortgage market.
All right, let's keep digging.
We've uncovered some pretty significant roadblocks.
Yeah.
You know, we talked about that market concentration, those rising interest rates, and then that whole tangle of unexpected obstacles. But the central bank's report doesn't stop there.
Okay.
It goes into technology.
Okay.
And its influence on mortgages in Kenya.
All right, so let's boot up and explore that side of things.
Let's do it.
The report talks a lot about digital transformation in financial services.
Yeah.
Is that having an impact on mortgages too?
Definitely. The Kenyan banking sector has been riding this wave of technological advancement, and mortgages are part of the current.
Okay.
We're seeing things like embedded finance, and even something called banking as a platform.
Banking as a platform.
Wapi?
Yeah. That sounds pretty futuristic.
It is kind of a big shift.
Is that like banking in the metaverse or something?
Not quite the metaverse, but it's a pretty big shift.
Correct.
Think of BAPI as turning banks into these one-stop shops. Okay.
For all sorts of financial services.
Okay.
Even beyond what they traditionally offered.
So instead of having separate apps and accounts for banking investments, insurance, maybe even paying bills.
Exactly.
It's all bundled together.
All in one platform.
Okay.
And that includes mortgages.
Wow. Okay.
DAPI uses these things called APIs to let external companies, like those fintech startups you hear about, to connect their services right into the bank's system.
So it's like a win-win.
It is a win-win.
Yeah. Okay. So what's in it for the banks, though?
They get to offer a much wider range of services without having to build everything themselves.
That makes sense.
Right. And it lets them personalize the experience for each customer.
So how does all this BAPI stuff impact someone who's trying to get a mortgage in Kenya?
Okay, so imagine applying for a mortgage online.
Okay.
You can track your application in real time.
Manage your payments all through one app on your phone.
Right.
No more piles of paperwork or endless phone calls.
That does sound a lot easier.
It is.
But with all this digitalization,
Yeah.
what about cybersecurity?
That's a great point.
Is that a concern in the report?
Absolutely.
Okay.
The report highlights a bunch of cybersecurity threats.
Like what?
That are facing the banking sector.
Okay.
We're talking ransomware attacks,
Right.
data breaches,
Uh-huh.
and even these things called advanced persistent threats.
Advanced persistent threats.
Or APTs.
Basically, highly targeted attacks from really skilled hackers.
So these are not just like your average, teenager in their basement.
These are sophisticated.
Yeah.
Sometimes they're even backed by foreign governments.
Wait, government-sponsored hackers?
It's serious stuff.
That sounds like something out of a spy movie.
It really is.
Wow.
The report emphasizes how important it is to have these really strong cybersecurity measures in place. Okay, so like what kind of measures are we talking about?
Things like regular data backups.
Okay.
Training employees to spot phishing scams.
Right.
And constantly monitoring for any kind of weaknesses in the system.
It sounds like a never-ending battle.
It is an arms race.
Yeah.
But it's not just the banks that need to be vigilant.
Okay.
Any third-party vendors that provide services to the banks can also be weak points.
So everyone involved
in
this whole digital banking system has to be on their toes.
Absolutely. The report really stresses that.
Okay, so we've talked about technology.
Right.
Now let's shift gears to the regulatory landscape.
Okay.
The report mentions some pretty big changes that could impact the mortgage market. One of the big ones is this increased focus on AML-CFT.
AML-CFT.
Break that down for me.
Okay.
What is that?
It stands for anti-money laundering and combating the financing of terrorism.
Okay.
It's a global effort to make sure that money from illegal activities
isn't flowing through the financial system?
So basically making sure criminals aren't using banks to launder money.
Right.
But how does that relate to mortgages?
Well, in 2023, Kenya stepped up its AML-CFT framework.
Okay.
And that has big implications for mortgage lenders.
Okay.
They're required to be much more careful about verifying borrowers' identities, understanding where their money comes from, watching out for any suspicious transactions.
So basically, they're just making sure that you're not involved in anything shady.
They're looking for any red flags.
Yeah.
That might suggest you're involved in something illegal.
Okay.
It's an added layer of scrutiny that might slow down the process.
Yeah.
But it's all aimed at keeping the financial system safe.
I understand why that's important for the overall system.
Right.
But it also sounds like another hurdle for borrowers to jump over.
It's a trade-off.
Yeah.
Regulators are prioritizing security, which is understandable.
But it does add some complexity.
Right. Are there any other big regulatory changes that we should know about?
Yeah. The report mentions something called the host country assessment process.
Host country assessment.
It allows the Central Bank of Kenya to assess the quality of supervision in other countries where Kenyan banks are operating.
Interesting. So they're like keeping tabs on their neighbors.
Exactly.
Yeah.
They want to make sure that all Kenyan banks, no matter where they are doing business, are subject to strong regulations.
So it's kind of like a regional safety net.
It is.
Okay.
It helps protect Kenyan investors and keeps the banking system stable.
Now, speaking of expanding access to financial services,
the
report also talks about microfinance institutions. Or MFIs.
MFIs.
What role are they playing in the mortgage market?
MFIs are becoming really important players.
Okay.
Especially when it comes to reaching people who might not qualify for traditional bank loans. And now they're starting to get involved in mortgages as well.
So they're offering mortgages to people who maybe don't have same level of income or credit history that the big banks are looking for.
That's the idea.
Okay.
MFIs often work with borrowers who have lower incomes or less formal credit histories. They might offer smaller loans with more flexible terms tailored to their clients' needs.
That sounds like a good way to help more people.
It is.
Achieve that dream of homeownership.
Absolutely.
Yeah, especially those who might not qualify for those traditional bank loans.
It's a positive development for sure.
It sounds like it.
They're really key to promoting financial inclusion in Kenya.
So there's a lot going on in Kenya's mortgage market.
There is.
Technological advancements,
Yeah.
regulatory changes, new players like MFIs entering the scene.
Right, it's dynamic.
It's a pretty dynamic picture.
Absolutely.
And this central bank report has given us a really valuable glimpse into what's going on.
It has.
Okay, it's a lot to take in.
It is.
But we've still got more to explore.
Yeah.
Let's wrap up this deep dive
by
discussing what all this means for you.
Sounds good.
And some key takeaways you can use.
I'm ready for that. Let's connect the dots.
All right, so we're back for the final part of our deep dive into mortgages in Kenya.
Yeah, a lot to unpack here.
We've uncovered so much.
We have.
Some good, some bad.
Right.
But what does it all actually mean for, someone listening right now?
Yeah, so if you're thinking about buying a home in Kenya, the key takeaway is be informed.
Okay.
Be prepared.
Right.
The market's got its own, quirks.
Yeah.
But there are ways to navigate it
and
do it successfully.
So what's the first piece of advice you would give to someone who's just starting to think about this?
Remember that market concentration we talked about?
Yeah.
Don't just go with the first lender you come across.
Okay.
Shop around. Compare offers from different institutions.
Right.
You might be surprised at the variation in rates and terms.
Okay, so do your homework.
Exactly.
Don't be afraid to negotiate.
Right.
What else should potential borrowers keep in mind?
Those fluctuating interest rates are a big deal.
Yeah.
Factor in potential increases when you're budgeting.
Okay.
And remember those unexpected hurdles.
Right.
Like the property registration delays.
Yeah.
Be patient.
Right.
Persistent.
Yeah, it sounds like you really need a strategy going in.
You do.
Are there any resources or tools that can help people navigate all this?
There are, absolutely.
Yeah.
Take advantage of online resources, financial advisors, even mortgage brokers who can really help you understand the fine print, find the best deal.
Okay, so knowledge is power.
Absolutely.
When it comes to getting a mortgage in Kenya?
Right.
What about the role of technology? We talked about all those digital advancements. Can that make things easier?
Technology is really changing the game.
Right.
Explore online platforms and apps that streamline the process.
Okay.
You might be able to apply online,
right,
track your application's progress, even manage your payments digitally.
So much of our lives is moving online.
It is.
Makes sense that mortgages would too.
Makes sense.
Is there anything else people should be aware of as they're going through this process?
Keep an eye on the regulatory landscape.
Okay.
Changes in those AML-CFT requirements and other regulations can impact the process. Staying informed can save you time and headaches.
Yeah, for sure.
Down the road. Yeah.
All right, so any final words of wisdom for our listeners who are, dreaming of owning a home in Kenya?
Owning a home is a huge step.
Yeah.
It's worth taking the time to understand the complexities of the Kenyan mortgage market.
Right.
Do your research.
Yeah.
Seek advice when you need it.
Okay.
And don't be afraid to ask questions.
Ask questions.
With a little planning and preparation, you can achieve those homeownership goals.
Well, this deep dive has been incredibly insightful.
It has been.
Thank you for sharing your expertise.
My pleasure.
And breaking down these really complex issues in a way that's easy to understand.
Happy to do it.
And to our listeners, thank you so much for joining us on this journey.
Yes, thank you.
We hope you've learned some valuable insights.
We do.
That will help you on your path to homeownership.
Absolutely.
Until next time, keep exploring, keep learning,
keep diving deep,
and keep diving deep.